Hi everybody, it's Martina, your local real estate agent, also known as Move with Martina. It's Thursday, it's time for another online networking series. This is episode 16. And just to give you a little brief overview what this is, I'm inviting professionals from the real estate business to come introduce themselves to you, also as small business owners. So today is a split screen. So I have the great pleasure to introduce you, Eric. I see Eric is here already, so let me bring him to the screen so we can learn some great information he has for us. I'm super excited about this episode. Hi, Eric.
Martina, what's up?
How are you?
I'm good. This light's like right in my face. I look like all ghostly, don't I?
I see you.
Let me back up a little bit.
Or maybe closer to the camera.
I don't want to get too close. I'm not trying to scare everybody.
Well, the important thing is to hear you, right?
Yeah, absolutely. Sound is on. Let me do this in the back real quick. Hold up. See if this might help.
Yeah.
Is that better?
That's better. Awesome. So, Eric, I'm super excited to have you on my show because I want to give a little brief overview, how I met you and what I thought the first time I saw you, if that's okay with you.
Absolutely, please.
So Eric came to our office, gave, his presentation on the subject that we're going to be talking about a little bit today. And first, when he started talking, I was like, oh my God, yes, what does he have to say? This is obvious a no-no. But the more he was talking, the more sense he was making. So I listened to his whole presentation and I'm like, this is genius. Like, why didn't we like talk about this sooner? Why didn't we have you sooner? This is such an amazing information. So I'm super excited to share this information with everybody so you can tell us what is it about. So first off, please introduce yourself and what do you do?
Yeah. So I'm Eric Rittmeyer. I specialize in reverse mortgages. And first off, I have to kind of dovetail on your story because I've done thousands of these presentations and I love walking into like hostile territory. And it was definitely hot looking at you, especially. We're very hostile.
Oh my God.
I got the vibe. I got the feel. So I knew you were very much against the reverse mortgage, which is what I'm here to talk about. And again, I've done, thousands of these programs. So I'm used to that. I love that. I love the adversity. I love the people who think they know bad things about the program. So yeah, I'm a reverse mortgage guy. I mean, I came out and talked to you guys about the reverse mortgage for purchase program, also known as the HECM for purchase program. So from your viewer standpoint, I mean, obviously this would be geared towards agents who are really looking to generate some more business. But also for your borrowers who are potentially looking to buy a new house. It's a great way, 62 and over, to buy a new property with no monthly payments. So
yes, and you ask us the question, why do you have such a bad opinion of this program? Like, what is it? And I didn't raise my hand because it's like, let me just listen to you and then maybe we can talk. And I had the same experience like many of my friends, like we know someone who had a bad experience and didn't turn out well. So let's not go that path, right?
Yeah, I deal with that. It's funny. I mean, I deal with a lot of, all my clients are 62 and over. So I deal with a lot of widowed, a lot of women who have lost their husbands. And I'll hear it all. I mean, the funniest one I've heard is probably, a borrower I meet with who says, this sounds great, Eric. I love it. It's an awesome reverse mortgage. Sounds wonderful, but I'm not going to do it because I heard reverse mortgages are bad.
Yeah.
And I asked her, I'm like, where did you hear they're bad? And she said, I don't know where I heard they were bad. Somebody told me somewhere. I'm not even sure. Actually, I do remember. I was getting my hair done. The shampoo girl told me that she knew somebody who did one and said, don't ever do a reverse mortgage. So it's those silly things where, unfortunately, nothing against shampoo girls. I mean, I love my shampoo girl. But, nothing against that. But they don't understand the program. A lot of people don't understand it. So they automatically just have these misconceptions out of fear, which is okay. It's understandable. It's a scary thing for our borrowers.
Right. So, yes, let's just get back to our initial question of who you are and what you do, right? And just tell us, how did you come about it? How did you start this? Because you only concentrate on this type, not only, but exclusively you concentrate on this type, right?
Yeah, I'm 100% reverse mortgages. So I've been in the mortgage industry for, I guess, about 21 years. And about 12 years ago, I went on my own and started specializing exclusively in reverse mortgages. And the reason why, just the demographics are there, and they still are there. I mean, the baby boomer generation, I mean, they say 10,000 people are turning 60 years old every day in the United States. So the demographic is there. It's a niche product, and I'm big in, there are riches and niches. I've always sound silly. Riches,
no, I hear you.
Great product.
Yeah. So can you give us a little more in-depth, information that you have and you can provide about this subject?
Yeah. So the easiest way to explain a reverse mortgage, I mean, there are two purposes for it. Purpose one is for borrowers who want to stay in their house, who don't want to move, who want to age in place. They use this loan to access some of the equity out of their property. It's tied to their age. So the older they are, the more they qualify for. It's based on life expectancy. And I hear it all the time. People, Eric, you just want me to die. You want to I don't want you to die. I want you to live a long time. But it's based off of age. So the older the person is, the more they qualify for. And it's what's referred to as a negative amortization loan. And basically what that means is they borrow the equity out of their property now while they're alive, and the interest is deferred to the end of the loan. And the end of the loan is when the last person permanently vacates the property, which normally is death. That's for somebody who wants to stay in their house and age in place, which from a realtor standpoint is not really your target. You want people buying and selling. On the HECM for purchase or reverse mortgage for purchase program, that's for borrowers who would approach you as an agent and say, hey, I don't want to be in my house anymore. I want to buy a new property, but I can't afford a monthly payment, or I don't have great credit, or my income's not great, or whatever. The reverse mortgage basically in a nutshell gives that borrower the ability to just about double their purchase price. So whatever cash they have from the sale of their existing home, you can take that and double it. That's how much house they can afford with the reverse mortgage. And when they buy that property, there's no monthly payments required on the money they borrow. It's deferred at the end of the loan. That's right. The high overview. I could talk for an hour about it. That's my condensed version.
Right. So a lot of people are going to be like still on the fence and be like, okay, where's the catch? Like, this sounds way too good to be true, right? Do you get those questions?
Yeah, all the time. Everybody says that. It's way too good to be true. And it's not. I mean, the bottom line is if somebody wants a negative to the loan, I mean, the negative is that you're deferring interest. If you even want to call it a negative, the kids normally don't like me because the kids are like, this is my house. I want my equity. It's like, not your house. It's not your equity. It's your mom's house. It's your mom's equity. Your mom's on the deed, not you. So the kids don't like me, which is fine. I'm okay. I'm used to not being liked. But if you want to have a negative, if you want to call it a negative, the borrower is basically deferring interest, which means there's going to be less equity at the end of the loan. I wouldn't call that a negative. I just call it something they have to be aware of. They're utilizing the equity while they're alive to age in place, as opposed to selling, downsizing, moving into a 200 square foot apartment and being miserable. So it's the deferred interest, I would say, would be a negative if you want to call it that.
Right. And, when you think about it for a little bit, you're like, okay, well, I have a, mom, dad who've been living in the home for 30, 40, 50 years. It's not up to date. And when they pass on and they have the home that needs a lot of updating, they need to bring up the home up to date to be, at the market value. It's more of a burden than anything else, right? Or if you have children that they're fighting over who's going to own it or whatnot, it kind of comes with a sour feeling at the end. And I think this is a great opportunity to give them the option to be like, hey, I'll solve it up front. There's no issues right after.
No, and that's the thing. And again, the kids, they get a little upset sometimes. And there's always, honestly, there's always a fight. But, I get the phone calls all the time. Eric, mom died. How do I get my money?
Yeah.
Okay, I'm sorry. You're obviously very distraught. Sorry about the passing of your mom. I get that all the time. So yeah, I mean, the kids get less equity at the end if you want to say there's something negative. But there's also insurance. These are FHA insured. So FHA has a clause called non-recourse, which means at the end of the loan, whenever that is, when the last person permanently vacates the property, if there's a deficit, the heirs walk away totally hands clean. So the heirs are never going to be stuck with the debt. That's called non-recourse. And that means there's no personal liability at the end. They walk away totally hands clean. On the opposite side of the coin, if there's equity, they sell, they pay off what's owed, they walk away with all the equity. The bank doesn't own the property. I'm just a lien against the house. That's it.
Yeah, and I think this is a great information that a lot of people don't know. That when I heard it, I was like, oh my gosh, that blows my mind.
But you were hating. Don't lie. You were hating on me.
I was hating.
This girl's hating on me. I could tell. I got the vibe. I was like, she does not like me right off the bat, which again, I'm okay with. I have that impression on people. Everybody's like, I don't like you. I'm like, okay, great. Good to see you. You're right, but tons of misconceptions, which is great for the agent, which is why I started doing this program about the realtor programs about 10 years ago, whatever, was because there were so many negative thoughts about it. And I'm like, what? This is silly. This is crazy. They're basing all this stuff and they're out spreading negativity about the program. They don't understand it, which is why I came about doing this program again about 10 years ago. It's been awesome ever since.
Yeah, it's really about education, because I have not used this program and I have not knowledge about this, but until you came and you brought that, information, you're like, oh my gosh, there's another aspect that we can bring to our buyers and to our, let's say, neighbors. Like I know there's a neighbor down the street he's 85 years old, and I know that he's not going to be there much longer, right? Because it's the home has stairs, and a lot of these clientele, they want to move to one level living, and they might need that, and it's great to have that.
Right, from your standpoint as an agent, for an agent, it's all about having another option available to your borrower. So I meet with a lot of clients who don't really want to be in their house, but they think they're trapped there because they can't afford another property. This is a way for them possibly to move. Again, the agents I work with who market this program and they're successful, are they going to retire off of it? Probably not. You know what I mean? But if it's an extra, if it's one extra loan that you get a quarter or whatever, it's one person you help move into their dream house to be closer to their grandkids, to be on one level, to be in a senior living, whatever. It's worth it. So again, riches and niches. It's not for every single borrower, but for borrowers who are 62 and over, it could be an incredible loan for them.
Yeah, and thank you so much for doing this with me, because I'm super excited to spread the great news.
I turned you. See, I knew that right off the bat. I'm like, that one, I'm gonna turn her. I'm like, she's upset. I just noticed too. I'm looking back here. I'm looking like Medusa. Do you see this? I have this light in the back of my head. You see that? I'm sure we get comments. I should have warned you. I have crazy friends on Facebook, so I'm sure I get a few. Mr. Benjamin Poe. I know he's gonna start writing crazy stuff. So anyway, keep it clean, Ben.
Yeah, I want to just shout out to all of us all of our friends who are watching. Mana, Bill, I see you guys. Hi. So let's get to my favorite part. Do you have a fun story for me?
Oh, we got to talk about me. I don't have anything fun about me, Martina. I'm a miserable person who loans money to old people and waits for them to die. I don't know. What do I got? I have hair. Oh, there you go. I have a full head. If I let my hair grow, I have a full head of hair. Nobody believes that. You ever watch Seinfeld? Do you remember Seinfeld?
Really? Yeah.
You remember Kramer and Seinfeld? Remember Kramer?
Yeah.
Yeah, my hair's like poof. It's like total Afro crazy nutso Brillo pad. So that's a fun fact about me. You'd never guess that, would you? You thought I choose to shave. I'm not losing hair. I have a full head of hair, a full mane.
Okay.
That's a fun fact, isn't it? It's pretty fun.
Yeah, I would have not guessed that.
You would see? You thought I just had a big bald, big head. It's not. I have hair. I just choose to shave it. So, little insider information there.
I hear you. My husband, he shaves his hair too. He has an afro. So as soon as he would grow a little bit, he's just like, it's itchy. I need to get it off.
Look like a tennis ball. I'm not playing that. I don't want to be. I'm either fully done or tennis. I'm nothing in between. So I'm not trying to look like Kramer. So.
Awesome. And an insider tip. What do you have for us to take away?
Yeah, I mean, I don't want to call it an insider tip. I guess maybe a recommendation or a suggestion from the realtor standpoint is, again, if you have borrowers that, or a database even of clients you helped buy a house 4 years ago, if you have somebody that might be in that demographic, you have to be 62. If you have somebody that might be in that demographic, it's worth taking a look at, maybe market to them. Hey, if you thought about buying a new house, give me a call. There's an FHA insured loan, no monthly mortgage payments required. It could be worth looked at. If you have somebody who's selling and they think they want to pay cash for their new house and they appear to be 62 and over, you got to be careful with that house. You don't be like, are you 62? And they're like, no, I'm 45. You don't want to
easy on the ladies.
Yeah, I was going to say, I never ask ladies about that. It's like when a lady's pregnant, I never ask you never ask if they're pregnant. You could be like walking into labor and delivery. I'm like, I don't even know I'll wait till you come out and like congratulate you. You never ask that.
Yeah.
So you got to be careful with the age thing. But if you have somebody who 62 and over, if they think they want to buy a new property with cash, this could definitely be an option for them. And again, emphasis on option. They can still buy the house. They can still have no monthly payments, because that's normally what our clients want. When they want to pay cash for the property, what that translates into, they don't want a mortgage payment.
Yeah.
It's not that they want to part with all their cash. They just don't want the payment affiliated with the loan. This gives them the best of both worlds.
Right. And just give us a little bit of information where you're located and which areas do you service?
Yeah, I'm located in Baltimore personally. I'm licensed in Maryland, Virginia, and Florida. It's a federal program. I have contacts all throughout the nation. So for anybody that would be looking in another state, I could put them in contact with a reputable lender in the area. But it is a federally insured loan. Me personally, I'm Maryland, Virginia, and Florida. I meet in person with all my clients. I do lots of the programs like you went to for real estate offices to get the word out about how great it is. I have some marketing materials available, some PDF files. I might have forwarded you one as well. You guys are more than welcome to. Yeah, so I'm there to help.
Awesome. Eric, thank you so much. I love when people, open my horizons and blow my mind. So
awesome.
It was great. And I'm so grateful you got to come here today and introduce your gift here. And I earned something today. Great.
See, people are learning. Who knew? Who thunk?
Yeah,
In Baltimore,
awesome.
we say, who thunk? Come on, Ashley, you can't talk like you're educated. You got to say, who thunk? Who thunk? Who'd have thought? It's good stuff.
Awesome. I'll have all your contact information below, so when people want to reach out to you, they will directly go to you and they can have a chat with you, and maybe their mind will be blown away once again. And
I love blowing minds, Martina. I love blowing your mind. It's the best I've ever done in my life.
Awesome. Awesome. Thank you so much, guys. Thank you, Eric. And I'll see you next Thursday. Have a great rest of your week.
Thanks, Martina. See ya.
Thanks. Bye.